Hi everyone, my name is Sandra Guerrero. I work for the Student Success Office and I'm an SI tutor for Introduction to Accounting. I'll be reviewing the beginning of the accounting cycle from Chapter 3. Here we have an example of a chart of accounts for a franchise placement agency. You notice that all his accounts are labeled according to their group. Here we have assets, and you have cash, accounts receivable, supplies, and equipment. Since they are all assets, they are all labeled by the same number. If you notice, they all begin with 100. All your liabilities should have the same thing. They should all be labeled with a different number. Owner's equity will have the same thing. These all begin with 300. Revenue, same thing, begins with 400, and your expenses, the same thing, they begin with a different number. You will refer back to this chart of accounts every time you are going to journalize a transaction, okay? And you will have to know the name of the account, and you will enter also the identification number of the account. This is what a general journal looks like. If you see here that it lists the date and the account titles and the description of a transaction. When something occurs within a business, you will transfer it and record it onto a journal. Here it says that on June 1st, A. French invested $6,000 in a new placement agency. This is where you have to analyze and try to figure out what two accounts are affected by this transaction. Since you are opening a business, cash and capital are going to be affected. In the rules of accounting, when you're journalizing, the debit goes first. So you would put here, cash is the first one, and it is recorded on the debit side. The second account that is being affected is capital. This will be recorded on the credit side. And notice that both accounts now balance. Okay, and you always have to include the summary of the transaction. So here you would put that it is the initial investment of cash by the owner. Okay, anytime a transaction takes place, this is how you will record it on a general journal. We can look at a second example of a transaction. Here on June 2nd, you bought equipment for cash for $350. So for the date, you will put that it was recorded on June 2nd. You bought equipment. So now you have to analyze again what two accounts are affected. If you bought equipment, then your equipment account is being affected. Your equipment is increasing. Therefore, it will be first, and you will record this one on the debit for $350. The second account that is being affected is your cash account. Why? Because since you bought equipment, you bought it with cash, and therefore your cash will decrease. You will put cash on the second line and record it under the credit section. Okay, and notice that since you have a $350 on the debit and a $350 on the credit, they now balance. And your summary for this transaction will be that you purchased equipment. So let's review. You are going to use your chart of accounts whenever you are journalizing your transactions. You will first analyze and try to figure out what accounts are affected by the transaction. And once you decide, you will look on your chart of accounts and look for the appropriate account number and ID code and enter those into the journal. Always include the proper date. The debit must go first. The credit goes second, and it is indented 1/2 inch, and then you will provide a summary of the transaction. Double check that both your accounts balance. Your debit is on one side and the credit is on the other side.